And he goes, John Elliott just rang me up and told me to fire you. I was attacking John Elliott, who at the time was the chair of the Liberal Party. He was the CEO of a conglomerate, Elders IXL, and I put out a major report saying I thought they were a house of cards, and I said it on national TV.
Wow.
I was 23. The economists are right. If you want the market to solve it, it could solve it tomorrow. Climate change could be solved tomorrow if we put a high regulated whole of economy price on carbon.
Just sat down with Tim Buckley, clean energy finance guru, incredibly smart man. Based his time at Macquarie Bank in the early days, where he forensically went through many companies. The amazing thing about this podcast is this combination of financial savvy, for want of a better word, and a complete and utter enthusiasm for the renewable energy sector. This was a very, very interesting podcast, and we had a lot of fun. I learned a lot. At the end of it, my brain was hurting from some of the concepts that Tim was talking about. So, without further ado, sit yourself down, strap yourselves in, and let's get into it. But before you do, don't forget to like, comment, and subscribe to our channel, and of course to Greenwood Academy. Let's get stuck into it. Tim, we were talking off camera before about the difference, and I made the mistaken assumption on accounting and finance, and these are two distinctly different things, aren't they? Could you sort of like expand a bit on that?
Yes, my sister is a long-term accountant, 40 years, very successful and very, very good at it. She does all my tax, but it is a very different skill set to finance, which is all about how money flows and how valuations work and the debt, infrastructure, equity, private capital, public capital, as opposed to reconciling the numbers for a company, the P&L, the profit and loss, the balance sheet, the cash flow statement. I mean, as a finance analyst, I would always look at the annual report. I'd always look at how those three intersect, and you're trying to find where are the gaps, what's missing. Like there's more evidence in one side of the, in say the cash flow statement versus the P&L, and it's actually trying to find the what management don't want you to know as a finance analyst.
Is it really like that? What they don't want you to know?
Absolutely. I've been interviewing CEOs. I've been a rather privileged career. For 40 years, I've been interviewing CEOs. They will always tell you everything they want you to know, and they'll always leave out all the bad stuff. And so the skill of an analyst is actually to talk to 5 different CEOs in related sectors, get them to talk about their own business, and then at the end you sneak in 10 questions about their competitors, and that's where you learn all the downside. And that's the trick of being a finance analyst. You've got the privilege of being able to actually study the industry from all different sides, but the CEO will always paint a very positive picture. They have to. At the end of the day, they've got to be believers.
Yeah, that's their job. And it sounds like it's fairly forensic.
There is a very forensic side of it. Like I think Warren Buffett and I are the sort of two nerds that still read annual reports. I'd always start at the back, because why would you read the glossy stuff at the front? That's what the PR person wants you to read. I want to know what the numbers are telling me and what they've hidden at the back, because the duty to disclose in Australia is very, very high. I love looking at listed companies. They disclose way too much information, so you can get all sorts of industry insights, but they don't. The accounting rules tell you that you must disclose A, B, C. Where you put it in the annual report, there's a matter of form, but they always hide the most interesting treasures right at the back.
Okay, so there's certain information that they have to put in these reports, but there's no shall, and I'm like referencing to Australian standards, shall that where they put them in the report.
Okay, I'll walk that back. There is a shell, but particularly in Australia, the auditors and the accountants do a critically important role, as does the stock exchange. So providing information that's robust, whatever is said is factually going to be 99.9% correct. It's what they're not saying, which is what the analyst's role is to find. What are they like? And a result comes out. You are literally advising clients within 5 minutes of the result coming out. You've got to scan 100 pages of information and find the one bit that the CEO didn't want you to see. Now, it'll be there, but it'll be hidden somewhere in the body of the text, and you're looking for a particular number or a particular insight. What's the, like, I'm just thinking Bunnings, a company I've followed for 20 or 30 years. It's what's the growth rate for comparable store growth rate. What's the sales growth? Now, for that company, it's my favourite company in Australia, has been for 20 years. Before that was CUB, Carlton and United Breweries. I did that one for 20 years, and that was the best cash business in Australia. But Bunnings has been growing year on year, comparable store growth of 5 or 6% per annum. Now, in recent years, it's slowed down to 2%. The difference between compounding 6% versus 2% for 20 years is profound.
But obviously, there's certain market forces that are beyond their control. That's why potentially there's a 2%. It's 2% now as opposed to previously, isn't it? Because so the numbers tell you something, but there's also a whole set of other metrics that will influence those numbers themselves. Is that correct?
There is, but that 2% figure, that would be the first figure I'd always look at in an entire Wesfarmers result, because that would tell me, are they just defying expectations yet again for another year? Because you do, and they did do 20%, 20 years of 5 or 6% compound growth per annum. It's slowed to 2%. That's a phenomenal difference, because you NPV that over, net present value that over a 10 or 20 year time frame. The business is going to double every 20 years. At 6%, it's doubling every 7, 8 years. Doubling. And so the value of the business and the profit margins are obscene in Bunnings as well. But they really, I shop there all the time, really good value for money for the customer, but the highest profit margin of any retailer in Australia, almost.
Well, they've also almost got a monopoly, haven't they?
They have, and the ACCC, I mean, I was studying the company 20, 30 years ago, and the ACCC allowed Bunnings to buy out at Hardware House, BBC Hardware House, and they allowed the two most powerful companies in the sector to merge. Now, Bunnings quite fooled the ACCC by saying, but if you look at the whole addressable market, we've only got 10% share, and you're getting us to 20%. 20% is nowhere near a monopoly. Now, they got 100% of the big box market in Australia. Now, at the time, the ACCC was saying, well, Woolworths is coming in as a competitor to you. Now, Woolworths did. They spent $300-500 million and then closed the whole business down.
Wow. And then Mitre 10 and Bowens are sitting back going...
Just being eaten alive slowly.
That's what I was going to shell-shocked.
Yeah.
Even though Mitre 10 is still... I mean, we're
totally offline.
Well, it all plays a role, but Mitre 10 is still in operation. I live in the patch up in the Dandenong Ranges, so there's a little local Monbulk Mitre 10 that serves the community well. But that's really interesting. It sounds like the kind of person required to do what you do really needs incredible attention to detail. Is that true of your personality?
It is, although when I first started, I'd call it privileged. I was trained in Macquarie Bank at the time, and as soon as I walked in, I was put in the research team. I wanted to be a investment wanker. They wouldn't put me in there. That's where the big money was. Yes. I got put in the research team. They just wanted to bring me down a few pegs. And then a year later, they said, right, you can now go to the investment bank. I don't want to go. I love research. I've found my patch, and I'm still doing financial research every day for 40 years. I got lucky. I think my mother, we'll come to that later, but she guided me in this area. But being able to actually have attention to detail and being able to sit there like stupidly for 12 or 14 hours and just go through the numbers, go through spreadsheets, go through the balance sheets and just look for the number that's most important. But then I realised very quickly you also need to be an extrovert, because no point being the best analyst in the world if you can't sell your research to a salesman.
Yes.
And we had 100 salesmen sitting in the room every morning at 7:30 waiting to hear our 5-minute pitch on each of our companies, and they all 20, 30 years more experience than me, and they'd just rip you apart if you didn't have your knowledge. So being an extrovert, being able to be quick on your feet. So I actually ended up going back to uni and being a university lecturer for a year, because I realised as soon as I walked into the morning meeting, you've got to actually stand on your feet and be able to talk with a degree of confidence that I'd never done debating. I'd been into history and maths and economics. I didn't think about public speaking, but literally walking into a room every single workday of my career for the first 20 years, and you'd have 100 bloody experienced salespeople wanting to pull you apart, because they then had to take what you were saying and sell it to their clients. And they need... So we had a very aggressive... We had the most aggressive dealing room, but we also had a rule. They could only attack the analysts. They could never attack the trainees. And we had a slight element of teamwork and pride. You don't want to destroy someone before they've got the confidence to realise that it's actually what is bloodletting. I mean, it was literally 1 against 100.
It's like a boxer, isn't it? Their first bout, you don't want to put them up against someone who's 10, 20, 30 points, whatever, if that's the correct terminology, above them, because obviously they'll lose.
Destroy their confidence.
You'll destroy their confidence.
And that wasn't the aim. The aim was to test you, because they're going to go and back you. They needed to know that. Now, I mean, no one explained it, but we did have a rule that the trainees could not. The analysts were totally fair game. The trainees were let off for, not scot-free, but they'd be gentled into the boiling water.
There's so many things I want to talk about earlier on, but I think I'm going to leave. I wanted to talk about, obviously you like spreadsheets and mathematics, but let's go back and I'll try a chronological approach. So where did you grew up in Australia, I assume? Or
I grew up in Sydney, Sydney born and bred, and I did a bit of a... my mother in particular was very, very out of left field. So my brother wanted to be a farmer, and we lived in the middle of Sydney. So she picked us up and took us up, and they bought a farm. My parents bought a farm. My mum took myself and my brother up.
Older brother?
Slightly older than me.
Yeah.
Well, much older than me, actually. Yeah. 2 years older. I remind him every single day. But she literally took us up. My father stayed in Sydney to pay the bills. My sister was doing her final years at school. So they stayed, we left. We went and lived on a farm for a year. And my brother took a year off school and realised he loved the land, loved that life. And so he then when we came back to Sydney, he went off to Farrer Agricultural College out in New South Wales, and I went back to the city life. But it was like I was a tiny fish in a huge private school, very privileged private school, but unless you're really at the top, you could hide behind 150, 200, like I had 200 colleagues.
Wow.
And but going up to a small town, Grafton in northern New South Wales, living there for a year, all of a sudden there was a big fish in a small pond, and I got lucky with the friends I made. There were all the guys just wanted to be farmers, so they didn't really care about study, whereas the 3 girls I got to know were all absolutely dead set. They wanted to go to uni. All 3 of them went to uni, so I fell in with those 3, so 4 of us, and I learned all of a sudden that I was relatively bright if I actually applied myself, because I didn't know that at Barker. I was very much middle of the pack, hide behind everyone else, don't stand out.
Did you have any sort of mentors? Because I always ask this question, because in this modern world we don't go through an initiation of a young man turning into a man, like when they're 16 to 17, nothing like that. But if we're lucky, we do have a family member or a teacher that has had a fairly decent impact on us. Was there anyone like that in your life at any stage?
Yeah, I do look back as a father myself on how my parents, and particularly my mother, guided each of my brother, my sister and myself to the careers which we've all stuck to. My sister's been an accountant for 40 years. They guided her towards accounting straight away. They guided me towards finance. Obviously, I loved money. I loved counting money. I loved analysing things when I was growing up. But I was assisting my father in technical analysis when I was 15, and he was doing that. So that sort of dropped me into that sort of area. And so by the time I got to uni, I just chose a business degree and straight into Macquarie. And then I actually had to slow that down for a year, go back to uni and be a teacher, be a lecturer for a year so I could learn how to public speak. But so I would say it was my mother. Like, she worked out that was where there was no debate.
So she could read really well, the three kids, I assume your sister and your brother and yourself could really read what kind of people you were or your innate abilities.
And I've never been able to replicate it, and she certainly didn't do it with my children. I wish she had, because particularly the boys, I think in our generation now, the boys are drifting. They're not seeing. We're so busy making sure our girls get a head start and get motivated and know that they can do whatever they want, but the boys don't get the same pressure, and boys develop later. And so
they do.
I think that's a bit of an issue, but I could never see what my boys were going to. I always went to a career counsellor, and he goes to my second son, Connor, I mean, you can do anything. And he goes, what do you want to do? And he goes, I'll be an engineer. And I got in the car, oh, great, you want to be an engineer? Why did you pick engineering? He goes, I just picked anything just to shut you up. And he's not an engineer, and then went off to do tech. Now he's doing town planning. Right. And I think I was just flying into Melbourne this morning and thinking, town planning, you can either screw a city or make it brilliant, livable, or the roads, the arteries, the bushlands. When you're flying in an aeroplane, I just love looking out the window, and you're reminded how small you are in the world, but how important town planning is to actually lay out a city so that it's livable and avoid congestion and stuff.
I think you meant, you're obviously from Sydney, but Melbourne's very rectilinear. It's north, south, east, west, all the way, whereas Sydney, you have interesting areas where you can meander, and from a livability perspective, I like the meandering myself, but from an ease of, I suppose, flows of traffic and from an analysis perspective, probably rectilinear is easier. I don't know. I'm not a town planner. I got to ask, so your ability, and I'll say it ability, your attention to detail, is this a nature or nurture thing? I always ask the nature and nurture question. It sounds like I want it. Please. Yes.
Nature, but knowing where you're going to go early on and having no doubts about it. I mean, I didn't waste any time. Like, I was a top-rated analyst by the time I was 23, unbelievably privileged, but interviewing top CEOs in Australia 2 years out of uni. It was Macquarie Group absolutely backed me, and the CEO backed me, and it was just Tony Berg. I was attacking John Elliott, who at the time was the chair of the Liberal Party. He was the CEO of a conglomerate, Elders IXL, and I put out a major report saying I thought they were a house of cards, a financial house of cards, and I said it on national TV.
Wow. And
Tony Berg called me in Monday morning, 7 o'clock. Did you just call John Elliott's business a house of cards? And I go, yes. He goes, number one, did your boss approve you to do that? I said, yes, Vicky did approve me to do it.
Tick,
yeah, thank God. I don't always ask permission. And then number two, he said, how did you get to the house of cards? Where'd you get the $15 billion from? And I pulled out my spreadsheet. I said, look, this is it. And he goes, okay, great, you've done the numbers. Back to work. And I said, why? And he goes, John Elliott just rang me up and told me to fire you. And I said, do you want me to go and pack my box? And he goes, no, we'll just never work with Elders IXL ever again. And we never did.
Wow, that's loyalty.
That was unbelievable. I had huge respect for Tony Berg.
Wow.
And but that's how I got lucky.
How old were you now? You're talking, you're still in your 20s now.
I was 23. Yeah. And I was attacking not one, but 4 or 5 of the top CEOs in Australia.
You're using the words attacking, but it's not really
it was my job. And again, I worked in a research house where we had no material investment banking. So we were an institutional broker. Our job was to serve our institutional investor clients who were investing on superannuation, for superannuation. So investing people's retirement. So my job was to assist the fund managers to make sure that they totally understood the companies in their portfolio that they were putting people's retirement money into. So their job was to evaluate which companies to invest. My job was to interrogate the information. Yeah, I've probably got a pugilistic angle there, but the CEO would tell them everything why they should invest. It was my job to point out what the CEO wasn't telling them.
And you mentioned that before, because it's really important. It's not just, it's like we learn from what we do, but we also learn from the mistakes we made and what we don't do. So I'm just trying to bring it back to, my understanding. This is really interesting. Maths. You must love maths.
Yeah, although I tried 4-unit maths at year 11. Year 12, I had a choice, 4-unit maths or economics. I chose economics. I had a brilliant economics teacher. I thought he hated me. He didn't. He used to love pugilism with me, arguing with me, but he taught me to love economics. And Lenny Nixon. So he taught me to back myself, to argue with a guy who was 30 years more experienced and debate economics with him. And that was his style of teaching, and it brought the best out in me. So compared to maths, I found maths quite dry by comparison. And high-level maths, like 4-unit maths, is the love of maths as opposed to maths for a system. Finance is a system. I did 3-unit maths and 3-unit economics.
It sounds like, for me, like when you're talking about maths is, there's a purity to maths, but it's just maths. Whereas finance, you're talking about numbers, but there's also these psychosocial, God knows what things going on, human beings, how they think, psychological aspects.
Yeah, there's the system.
For instance, the CEO's not revealing the nitty-gritty because he's a human being and he has a vested interest in conveying a certain, narrative.
Correct. And so what I would look for is a governance system where the CEO and the CFO and the board are all aligned in the long-term interests of the shareholders. They're not. The CEO, the board should be, the CEO gets an annual bonus. And if he gets a really big bonus and then leaves the next day, he's got no responsibility to shareholders the day after. So what I would rather is that he actually doesn't get his bonus for 5 years, or it's tied up, or it's invested in the stock.
Right.
No, it's not. I'm absolutely all for having a tiered system where everyone in the company knows the CEO is getting paid a huge amount of money if they're successful. If they're not successful, they shouldn't get. So I love the bonus structure. That's finance breeding, if you like. It brings out a very strong alignment of interest. But if the alignment of interest is only on an annual basis, and finance is all about annual, a year's a long time in finance, but corporates are meant to be investing for decades. So you want the CEO and the CFO and the senior management aligned in the long-term interest. And so I love the fact that finance has, for investors, for superannuation, it has the sole purpose test, which is that investors, fund managers, are meant to invest solely to maximise the risk-adjusted return for their investors. They're the trustee for the investors. They don't own the money, they manage it. But what often gets neglected in that statement is that it's for the long-term interests of the investors, because superannuation is there for 10, 20, 30, 40 or 50 or 60 years. So the sole purpose test is the overarching test, is a legal test. There is sole purpose for investors in superannuation to maximise the risk-adjusted returns for the investees for the long term. And finance, a week's a long time, a month's a long time, a year's a bloody long time. You make or live on the back of the calls you're making each week. So you've got a misalignment. Now, if the CEO's paid an annual bonus, his alignment is not for the long-term interest, it's for the short-term. So unfortunately in Australia, I think finance has become too powerful. Like our finance system's about 4 times bigger than America's.
Really? Proportionately?
Proportion to the rest of the economy, or it was certainly 10 or 20 years ago.
Well, I know they're trying to cut down a little bit on social media influencers giving financial advice.
Well, that's about responsibility.
Yeah,
At
yeah,
the end of the day, an influencer is not
qualified
They're
to.
not qualified to give financial advice, and you can make or steal someone's superannuation way too easily, and you should be held. Like, I worry in Australia, white-collar crime is often said to be victimless crime, yet it's people who know better
Yes.
are still doing it. They're still stealing. They should actually be punished 10 times harder than blue-collar crime.
I agree.
And then we'd have less fraud at the top, but it's institutional. Anyway, don't get me started on that.
Okay, on a slightly different note but connected, do you agree, this is a bit controversial, do you agree with the Scandinavians' approach? I think it might be Denmark or Sweden or both, where they actually, you are allowed to know exactly how much anyone's making, their income. Now that's transparency at its highest. But I see it as being slightly problematic, but I'd be interested to see what you've got to say about it. And have you heard about this?
I have. There's a very interesting Chinese professor who runs a university in Hong Kong. He calls it the Unicorn University. And unicorns, because he makes unicorns. Unicorns are companies that go from $0 to $1 billion, startups. And he's got a couple of unicorns in the portfolio, and he's got a couple of Chinese billionaires on his board. And so he calls himself the Unicorn University. He works with Sydney Uni, he works with Harvard, he works with Oxford, and he works with Instead in France. So the top universities in the West and in China. In other words, there are good parts of every economy, including China, including America, including Europe. Let's learn from all of them. But what we're trying to do is train the next group of entrepreneurs, and he hopes one in every year will become a unicorn, become a billionaire. Now, he does a study which it really opened my eyes up to it. Like, I will get to China. I am in awe of what China is doing. Now, there are plenty of China bashers. We've been trained by our security forces, by our military, by our big brother over in America, that China's the enemy. Yeah, China's our number one trade partner. So we'll come back to that because we cannot afford to keep that oxymoron going. It's just wrong to consider our number one trade partner our enemy. It's just
it's weird. It's weird.
Well, it's so self-destructive.
It's very self-destructive.
Particularly when they are transforming the world, and in our era, they are absolutely doing that. But so what he pointed out to me, and it really opened my eyes to China, he said, look, who's got the most billionaires in the world? The answer is America. By a country mile, like by a huge mile, they have 400 billionaires.
And proportionally as well, is that the same?
Well,
or
I'll give you the numbers, but sheer numbers, 400. This was 2 years ago. I haven't heard him speak or seen him update those numbers. But 2 years ago, China had gone from, in the year 2000, they had 1 billionaire. In 2024, they had 200 billionaires.
Ooh.
And so China has the second highest number of billionaires in the world, and it's created the most billionaires in the last 24 years of any country in history. Now, Europe, and what he points out is Scandinavia has very few, and the very few that they have come from retirement, moneyed family money.
Okay. Old money. Yeah, gotcha.
Old money, that's the phrase. Yeah. Whereas these are billionaires who are self-created. China had one, and now they've got 200. And so he said, look, if you look at the entrepreneurial spirit in China and America, it's next level compared to any other country in the world. Now, he wasn't actually saying...
But isn't that flawed?
He's not saying that's good or bad. He was saying that is what it is. Who's got the best safety net in the world? Scandinavia.
Yes.
Scandinavia has got plenty, but it's actually dampening the entrepreneurialism. Now, America is an example where entrepreneurs have now gone absolutely batshit crazy and have taken over the country. I don't really want to talk about America because it's just absolute capture of an entire country by the ruling plutocracy. 5 or 10 people now rule America. And their little puppet is Trump. So, no, they can't control their puppet. I'll stop there because I don't want to go into an American...
Off camera.
But at the end of the day, China's... Like, most people in the West go, but China's a command and control economy. It's a communist country. Actually, no, it's a two-phase economy. It's got the biggest state-owned enterprises in the world, And half the economy, more than half the economy, is free market. And that free market has free market spirits far more than Europe does. So it's far more dynamic than Europe. And that was his point, that American capitalism, America has the dynamism, and so does China, if you measure it by billionaires. Now, he does say the Gini coefficient, the wealth coefficient, is out of this world in America. It's unsustainable. But it's also unsustainable in China, whereas Europe, it's a lot narrower. In Australia, we were following America. Think of the wealth disparity of Gina Reinhardt and Twiggy Forrest and Clive Palmer versus the average person in Australia, but it's next level in America. But most people in the West don't realise China has the second biggest billionaire base in the world, and that's been created since the start of this century, 25 years. They have a very powerful market, but they also have a very clear strategic direction. They still have their 5-year plans. They still have. There is no debate. There is no democracy. There is, like in Australia, we're debating the climate science, like how you can debate science. Only a fossil fuel nation can do that. We'll come back to that. China doesn't have that problem. They do not have to worry about elections, so therefore they have the absolute clarity of strategic direction that allows them to win.
That's an interesting point. My father grew up in Serbia, and he died in 2022. And we used to have a lot of conversations about politics and democracy. And he was fairly, democratic. But he said at one stage he said, you know something, if you have the right benevolent king, a lot can be done. And I went, and we talked about it, and I said, I see what you mean. So I can see what you're saying.
Can I interrupt?
Please.
Lee Kuan Yew. I lived in Singapore for 2 years, and Lee Kuan Yew founded Singapore. It was a swamp at the end of Malaysia, and by the time I was there, it was the richest country in the world per capita. The richest country in the world, and it wasn't because of their oil wealth. It wasn't because they had any commodity. They had nothing. They had humans.
Yes.
And he marshalled that. So Singapore was a benevolent dictatorship, Lee Kuan Yew. He was also relatively honest compared to.
Yes, I know. I'm laughing because that's the fly in the ointment. You have to have a successful system in that situation.
And his children now run the country, and
they're pretty relatively honest as well.
Well, honest or not, I think they had a very strong role model in their father, and he created it. So it's like their family business. It's only 5 million, 6 million people, but at the end of the day, it's been passed on. The role of Prime Minister, we call Singapore a democracy, but it's not.
Yeah, right.
But that's how it got from being a swamp to being the richest country in the world per capita in 40 years, like a phenomenally successful story.
That is amazing. It's interesting. We're going back to China. You mentioned this particular approach they've got. They've also got heavy. The Chinese Communist Party, the government, have heavily invested in EVs, BYD. If you do a bit of research, it's a bit of a weird one, the whole BYD, because they have been losing money, billions every year. We can talk about that. But it's interesting that if you they've got a long-term strategy, is what I'm trying to imply. China's been around as a culture for thousands of years. I won't generalise, but they seem to be very smart at what they do, and there's these strategies that put in place, and they're kicking goals. And what you said before, it's silly for us to badmouth our major trading partner. I don't know how we get away with it still. It's a weird one. It is a weird one.
And it's a point I make regularly. So I'll put on the record, we have no clients, so I'm only funded by Philanthropy. So a couple of rich institutions have funded me for 15 years.
Wow.
I know they've got no inherent bias other than they accept and want action on the climate science, and so I know them individually. I know where they're coming from. I know they've had no involvement in my business. Now, there are some most billion, like 99% of the billionaires, I wouldn't take money from. So I don't take any funding from Fortescue. And we've just seen Twiggy Forrest be absolutely taken to the cleaners for talking out of both sides of his mouth on First Nations.
He's been flayed. Yeah, he's been flayed. Yeah.
Yeah, Joe Ashton just flayed him, and quite rightly. Joe Ashton is very good at flaying people, but the fact he can say that about Twiggy and not get sued means it's
wow.
He deserved to be flayed on this point, because I think he's actually been hypocritical there, saying he's the best friend to his First Nations people. But put that aside, and it's a big one, but it's enough for me not to take any funding from Fortescue or from Minderoo. They've offered me funding from Minderoo, his charity. I won't take it because there is vested interest, but I'm also working in his space, so it's a conflict of interest. If I'm going in to annoy the energy minister, the industries minister, you name it, and I'm funded by Fortescue, then I'm going to be biased. Everyone, like I've been in finance for 20 years. All I did as the head of research was manage conflicts of interest every single day between our investment bank and our institutional client base. And how you manage that, it required the integrity of the analyst. The analyst's name was on the report, but the investment bank would do everything they could to make the analysts say what they wanted them to say. And that was always a pressure. And by the way, the investment bank's bonus pool was far bigger than our institutional bonus pool, but you only got one reputation. So it was my job as head of research to protect the analysts so that they actually looked after our investing client base. It helped that I worked at Citi and it had a relatively weak investment bank. That's why I chose it. I actually left Macquarie. Macquarie was by far the strongest investment bank in Australia, but I didn't work in the investment bank. I worked for the institutional client base, and so I was actually exposed to the investment bank. I went to Citi because they didn't have an investment bank, so I could actually have one master and serve honourably in it. So I suppose I deliberately chose that because I didn't want to have to walk both sides of the street. You can't, not when you're being paid stupid money.
How important is, and I'm asking this question from what you said about, certain organisations or authorities or people that you wouldn't work for in a way. How important are ethics and morality when it comes to finance? For you. Obviously, I'm asking for you. Well, let's say in general, and then for you, and see if it differs.
Yeah, for me, it was always in the back of my mind, and that's why I left Macquarie. I loved Macquarie. It was the dumbest financial move of my life. My ex hates me for it because I was offered a lot of Macquarie stock when I left to not leave, and $2 a share. It's now, $200 a share. I left that, but I left because I wanted to go and work for the best institutional stockbroker in Australia. That was a company called County, which then became Citigroup. So I actually did it because I didn't want to have that conflict, but at the end of the day, I wanted to actually, I think it was. But when I talk about finance, finance is amoral. And it's not immoral, although they're very similar words. It's amoral.
I know. It doesn't follow a moral code.
There is no moral code, whereas corporates are meant to have a moral code. Now, that's, put it in business language, that's the 5-Porter test, that you have to look after your customers, your workers, your suppliers, and you have to keep an eye on your competitors and your shareholders. And
in that order?
No, not in that order. So in finance, the equity investor is supreme. Number one, and there is no number two.
Hence the aim.
It's amoral. And if that is your evaluation, like I remember having a moral debate, and at the time I couldn't answer it, but Glencore or News Corp, they paid no corporate tax. Should I actually think that's good or bad? Does it profit shareholders that they pay no tax? Yes. That's good for shareholders. It's bad for the country. But yeah, at the end of the day, paying no tax systematically, so long as you're not breaking the law, so that's the evasion versus avoidance. Yes. Avoidance is legal evasion. So they can't be punished for it. If they are smarter, and Macquarie was always the smartest group in the room. Like, you never wanted to sit on the other side of the desk against Macquarie. Who's the bunny in the room? Well,
wow.
They would always win. No, they were amoral. Their job, that's why they're called the holy dollar. That's their symbol. And I'm a Macquarie Bank shareholder still. Not the shares, I had to buy them and I paid 10 times what I left them on the table at. But at the end of the day, you can't beat them. They're the smartest people in the room. They have the sole purpose test. But a corporate is meant to look after the environment, the shareholders, the customers, the suppliers. They're meant to manage their brand. They have a social license. No one talks about social license in finance.
Because it doesn't exist.
We've put this label ESG, and in India it's CSR. You're not allowed to call it ESG in America anymore. It's illegal because BlackRock is now in fetal position because Exxon and Chevron are writing the rules for Trump. So at the end of the day, the first thing that Trump did was destroy ESG, literally destroyed it. And he's gone way beyond that now. But at the end of the day, you need that in the companies. You need companies to actually, like the debate, should a CEO stay in his own lane or their own lane, or should they actually speak up? We need CEOs to show leadership. I love the fact that Matt Koyman at CommBank is speaking up in my area of interest, which is climate and energy transition and Australia's long-term livability. He's talking it. But at the end of the day, he's the number 2 CEO in Australia by market cap. BHP's walking it back, as we just saw in Four Corners. So at a time when BHP is looking after number 1, their shareholders, so is CommBank, but CommBank's then using that platform to say, well, we want to actually have a sustainable, strong economy for the long term, because that's CommBank's remit. BHP doesn't need a strong economy, they need a strong China, because they export iron ore to China. So they're saying, well, a livable planet, not our problem. Well, hang on, it is someone's problem. And if BHP and CommBank don't show climate leadership, how does Albo show climate leadership? Politicians follow, they don't lead. They pretend that they lead, but they don't. They've got to work within the unwashed, dirty masses of Australia, not the 10% purists like myself and you working in the climate and energy area.
It's much harder.
They have to bring the average Australian along every 2.5 years. So if CommBank can't show leadership, how does Albo show leadership? We can come back to it. So I expect corporates to speak up, but then they often get taken to the cleaners for it if they back an issue which is personally really important to them but not to their customers, or they speak up and the average Australian doesn't agree with them. So is that their role? It's not their core role, but at the end of the day, we need leaders, and the biggest corporates in Australia, the most successful, they should focus on their shareholders, they should focus on their customers, they should make sure they're doing a really good job in their own business.
Well, that's their family, isn't it, for want of a better word?
Absolutely, but we need the privileged elites of Australia to actually act in Australia's national interest, and that requires some degree of leadership. And if we're not going to get it from our billionaires, and we're not going to get that, I won't name our number 1 billionaire because she can sue me, but Hancock Prospecting doesn't show any leadership whatsoever, and in fact, they're climate science deniers outright.
I'll just pick you up on one thing. In regards to the best interest from Australia, it would have been nice if the ABS had kept in, which they did because I studied economics in the early 80s, Monash University. They used to have all terms of trade, capital inflow, capital outflow. They stopped publishing capital outflow in 1986. Please explain. No. Well, maybe off camera we'll talk about that. Look, it's a really interesting thing, and I now I understand there's an amorality when it comes to financial, but it's not really an amorality. It's more like our number one focus is our shareholders. What's best for them is what we do, and that's it. That's the end of that. So that's their family. So I'll say there's a kind of morality, but it's specifically for just that one segment. Whereas you said with the corporate sector, there's a bit of a list. There's this hierarchy, and there's a priority of, yes, we cover this, we cover that, we cover that. Now,
and not just the number 1 priority, it's a legal obligation. It's actually the sole purpose test is the law that governs superannuation money in Australia. So it doesn't apply to the banks, doesn't apply to the insurers, it applies to the asset managers. And they're called asset owners and asset managers, but they're managing assets on behalf of our super. And so the overarching test, the sole purpose test, is that the principals, the trustees of those organisations, so the Aware Supers, the Australian Supers, have to work solely in the long-term fiduciary interest of their...
Even if it means circumventing existing environmental laws.
Would it be in the long-term interest of the retirees if they can pollute for free? They will pollute for... So let's bring this to energy now.
Yeah, please.
I've said the government needs to, generally follows. It's rare you get a politician who leads, and Paul Keating's my favourite Australian Prime Minister. Like, he transformed the finance system so that Australia now has the most powerful superannuation system in the world by a country mile. Will soon be the second biggest savings pool in the world.
Okay,
that's Paul Keating's legacy, one of them. So he created Australia's financial resilience. That's why we've had 50 years of unbroken economic growth, thanks to Paul Keating. But I managed to lose my train of thought. So finance, at the moment, we've got private finance being told we need, and by our treasurer, Jim Chalmers, and I'm actually a fan of his. I think he's doing a relatively good job. But Jim Chalmers is sitting there, he's monthly meeting with all the CEOs of all the biggest financial institutions in Australia and saying, we need you to help us, the government, solve for housing, we need to solve for climate crisis, and we need to improve productivity. 2 years ago, those were the three top priorities of this government. And he was sitting down once a month with the top 15 CEOs of Australia and having that discussion. How can we change the rules and bring you guys in to solve it? Because you guys collectively are far more powerful than I do, far more power than I have. So how do I get you to mobilise in to solve these problems? But at the end of the day, we're asking finance with the sole purpose test to solve for the climate science at the same time as we're saying polluters don't pay. I can pump out carbon pollution. I got picked up quite fairly by someone on LinkedIn. I was calling out carbon emissions. It's carbon pollution. In business, polluter pays. That's how the market economy works. If you pollute, you can pollute, but you will pay a fine each and every time you pollute. So therefore you either pollute and pay the fine knowing, or you actually clean your act up, and companies therefore clean their act up. Not all companies, not all the time.
Or you do both, and you still keep on polluting, and you say that's the cost of doing business, and then you convey to the rest of the market that you're actually trying to do something about it, but the reality is you're not.
And then you get sued, and eventually the company goes bankrupt. So that's the power of law and lawyers to actually hold the companies and the directors to account. But at the moment, we're saying the single biggest source of pollution in the world is carbon.
Yes.
And yet we're not putting a price on carbon. Now, that's not an economic term. I'm a finance guy. But the economists are right. If you want the market to solve it, it could solve it tomorrow. Climate change could be solved tomorrow if we put a high regulated whole of economy price on carbon. Now, do we need to do the whole economy? It's easier if you do. But you could do it on 80% of the economy with about 20% of the effort, and you'd actually get the same outcome. So we had the world's leading carbon system 12 years ago. Tony Abbott ripped it up, proudly ripped it up, and he did a dance with 3 or 4 of his mates, and they were all supposedly called small L liberals. Rubbish. They were destroying our kids' future, intergenerational equity, and they paraded around like a bunch of Muppets, but they were marionettes, being where Gina Reinhardt was actually the marionette puppet master.
The puppet master, yes.
Because,
or in her case, puppet mistress, possibly.
Yeah.
Sorry.
Yep. We won't go there. So, but at the end of the day, it's the fossil fuel industry that was cheering, and their little minions, the Prime Minister of Australia, was doing the little jig. Like, that's how embarrassing it is. Like, Gina Reinhardt's a climate denier. I can't be sued for saying that because she is. She admits it. I won't go further on that point. But at the end of the day, that's the power of finance being sideswiped. Jim Chalmers won't put a whole of economy price on carbon pollution, yet he says to Minister Bowen, we want you to go and decarbonise the economy. Do it with both hands and both feet tied behind your back. It's ridiculous. Now, at the end of the day, Minister Bowen has gone, okay, well, I can't do the best or the second best or the third best or the fourth best. I will go and use the fifth best solution. It's called the safeguard mechanism. And so I am really strongly defending the safeguard mechanism because it is a carbon price by proxy. It's a carbon price on 215 of the biggest polluting facilities in Australia, and it's regulated and it ratchets down 4.9% per annum. It's driving real economic reform. Now, nowhere near enough because the carbon price in Australia is 35 Aussie dollars. So, but in Europe, it's 70 to 80 euros.
Which is a heck of a lot more.
10 times, 5 to 10 times what our price is. So they've got a decent price signal and they've got a far more regulated and far more comprehensive across the whole economy. We've only got it in a small part of our economy. So we've got the safeguard mechanism review coming up later this year, and I will definitely be recommending that we deepen, we broaden the safeguard mechanism thresholds so that it covers electricity, so it covers industry, not just the biggest polluters, but medium polluters. And most importantly, that we take the safeguard mechanism generates safeguard mechanism credits. Credits are then tied to the value of the ACCU, the Australian Carbon Credit Unit. That is the price on carbon pollution. It's $35 a tonne. I don't want it going to 100 tomorrow or 150, which is where Europe's already at. What I want it is going to where Europe's at, but over a 10 or 15-year time frame, because we are a democracy. We do have vested interest from the fossil fuel industry who, if we go too far, they will yank the government back or get rid of them entirely, as we've seen. They've sacked plenty of prime ministers in Australia. So we can't do it overnight. We've got to realise, I used to use the phrase, we're a petrostate trying to be an electrostate. China is definitely an electrostate. America is totally all in on petrostate. But we are the third largest fossil fuel exporter in the world, Australia. So we think we're a good country, but we're actually the third biggest exporter of the bad shit in the world. Now, America's the biggest producer of fossil fuels in the world. We're the third largest exporter of fossil fuels. So if we think we're just going to let the fossil fuel industry quietly go to their grave and not fight tooth and nail or subvert our politics,
well, it's naive, isn't it?
It's totally naive. So what I would like is for the Australian government to put in a deeper, wider, broader safeguard mechanism and then have a floor price on the price of carbon that ratchets up in real terms slowly but progressively. It's like, don't drop the frog in boiling water, let them simmer in lukewarm water and then gradually pressure up, because we've got to get it systemic. We've got to get it long term. If it goes too fast, too far, then it'll get turfed out. The Albanese government will get turfed out, and then Pauline Hanson will be our Prime Minister and she'll rip it all up just like Donald Trump's done. You know, that you go too far and then you'll have systemic overshoot on the other, and then we'll just be another decade behind. And that's the power of the fossil fuel industry. We've got to understand what we are. We're nowhere near an electrostate. We could be an electrostate. Albo keeps saying we want to be one, but he's ignoring the fact that BP, Woodside, Santos, Shell, Exxon, Chevron, Impex, BP, Total, they're 10 of the biggest companies operating in Australia. Each of them has 10 to 15 to $20 billion revenue a year in our country. Most of them pay next to no tax. They pay next to no royalties. But
how many of them are Australian companies?
2, and notionally 2.
Notionally, yeah.
But the 80% of them are foreign and they pay bugger all tax. Now, there's one exception, Chevron, and Chevron likes to brag, we pay tax. They're the ones that got caught with their hand in the till. 3 years ago, they got taken to the cleaners by the ATO. It's the only time the ATO has ever successfully sued a multinational, and they sued them for hundreds of millions of dollars. And now Chevron brags now that they pay billions of dollars corporate tax each and every year in Australia.
They've turned it around.
But they do. And I actually, I had a fossil fuel journalist ring me up, and I actually defended Chevron, and he refused to write what I was saying. And his boss then pulled the article, because Chevron's CEO in Australia immediately rang him, saw the article, pulled the article, threatened to sue them. Because they put out a press release saying in the last 2 years they paid $7 billion corporate tax in Australia. But that's what they should have paid. The fact that for the 10 years prior to that, they paid precisely zero, and then they caught done for evasion. But they're now doing the right thing in our country, which means that we can pay for our nurses, our policemen, our firemen, and our teachers, all of the critical infrastructure that keeps our economy going, because those buggers, for want of a less polite word, are actually paying a remotely fair share of corporate tax in Australia. Exxon isn't, and therefore our teachers are underpaid. We could easily pay our teachers a lot more if we actually had a fair royalty system and we had a fair corporate tax on multinationals. But it's not, I'm only focused on fossil fuel companies, but think about global defence companies. They pay precisely no tax in Australia. Think of the media barons, the IT barons, they pay no corporate tax in Australia, or next to none. Like Glencore used to pay $40,000 corporate tax a year in Australia. Why? No, they did it because Michael West used to publish the top 10 tax bludgers in Australia, and Glencore was always on that list. They paid $40,000, which means they were paying $40,000 more than the other 10, so therefore they got off Michael West's list. Like, talk about they voluntarily paid $40,000. They were making $15 billion revenue a year in our country from digging up and shipping off our commodities, but they paid royalties on them. They're paying next to no corporate tax. Like, it's just don't expect a multinational to play by Australian rules. They don't have to. And
so you can't. So really, you can't blame them.
I mean,
for a long
time,
I'd like to.
No, I think we should. For a long time, I thought the OECD tax review was going to deal with this problem, and I was naive. I don't work on tax. I work on climate and energy, and so I kept reading the OECD is doing a global tax review. They want multinationals to pay corporate tax. They want a disclosure by country. So Glencore had to do a country by country P&L, profit and loss statement, so that the Prime Minister of that company could see how much corporate tax Glencore was paying in that country. You can't get that number in Australia.
Right.
But all of a sudden I realised, well, hang on, where are the biggest tax havens in the world? Oh, that's right, the UK and America. Who was leading the OECD review? The UK and America. They've got more tax havens, like we think Delaware, think Cayman Islands, think City of London is a tax haven.
It has its own special laws. And
they're not written down.
It's like the Vatican City, isn't it?
It's like the Vatican City, but no one knows about it. The king is not allowed to walk in.
I've heard that.
It's criminal.
I know.
There is a square mile. I'm like my old company, NatWest bought County. So the company I worked for had about 5 different company owners, parent owners. One of them was NatWest. NatWest's head office was in the London City. I didn't know what that city square meant. It meant they are not governed by the rules that apply to the rest of England.
It's weird.
And it goes back 800 years and none of it's in writing. It is totally weird.
Oh, it's not in writing. Oh.
So for a long time, I was thinking the OECD tax review would deal with multinational tax reform. But of course, 10 years later, they still haven't dealt with the issue. So it's up to Australia and Canada, who are all in the OECD, to look after ourselves, because we're the 2 countries with the least tax havens. So if we want them to pay corporate tax in our country, we need the Australian government to stop waiting for the OECD to do something, and for Australia to say, we need the Business Council of Australia to actually stand up for Australian corporates to level the playing field, because Australian corporates all, if they're listed, they pay 30 cents in the dollar corporate tax each and every year. And I can say that hand on heart because I've studied them. The average Australian corporate tax rate for an ASX, Australian Stock Exchange listed company, is 30%, and it always has been. And franking encourages that, but we won't go there. But the average multinational pays a fifth or a tenth of that, or nothing, in Australia. Why should they? Exxon pays plenty of tax in America, but they operate in Australia. They should play by Australian rules, and yet the Business Council of Australia is bribed to stay mum on this, because they obviously have all the multinationals on their as their major sponsors. Anyway, everyone sings for their supper, which is why I go back. I have no government funding, no corporate funding, no finance funding, no Chinese government funding, because, ironically, I got offered to write an op-ed in China Daily last week, and they said, oh, please fill in this form and we'll pay you $100. I don't want any funding from the Chinese government. I would love to have my op-ed published in your newspaper, and it is. It was published yesterday, and I'm very proud of it. But
don't pay me.
They asked me 3 times, could you
right,
pay? No,
right,
because
right.
I love what China's doing. It gives me hope, and that's why I use the word love. Like, I get my hope. I look at America and I despair. So my vow is I'm not going to look at America while Trump's around, but I actually think we can absolutely solve the climate crisis, and all you need to do is have other countries replicate what China is doing. And that's why I'm going to China in a week's time. I love going up there. I love the factories. But last time I was up there was at the Bao Forum and Australia-China delegation, all about decarbonising steel. But the whole conference was about decarbonisation and AI, and the two converging mega waves, and China is all over both of them and leading the world on both. But I love going to see the Chinese factories. Like, people go, what about slave labour in China? I go, have you been in a modern factory in China? There is no worker. They're robots. There's one guy. We play Spot the Worker because there's one guy watching the hundreds of robots working. China's got more robots, 5 times as many robots as Korea, where Korea is the second largest number of robots in the world, but China's moving faster because they've got actually workforce declining for the last 3 or 4 years. Population peaked 3 years ago.
Yeah.
So they're not trying to protect the workers anymore, and the wage costs keep going up in China regularly. And at the end of the day, they're not worried about it. And so that's why I say we need to partner with Chinese companies, because we need our young Australian engineers to actually see what a real modern factory looks like, because we need them to learn from the best, and the best are in China. And we need Chinese equipment, Chinese robots, Chinese supply chains, Chinese partners. I don't want their capital. Like, let them have some equity in our businesses so that they actually feel alignment and give us the best robots and the best equipment. But the last thing we need is capital. Australia's got more capital than you can poke a stick at, thanks to Paul Keating. But what we need is their partnership so that we get the best, the top tier shelf, because our young engineers need to realise to run a factory today is to do robotics.
Doesn't have to be the best. It just has to be better than what we've got. Off camera, I was just talking to Tim about ESG and carbon accounting and scope 1, 2 and 3. And before your eyes glaze over, don't, because this is really important. And I was hoping that Tim could mention how important this actually is and what it actually means. So, because these are pretty new concepts in being used. So yes, ESG and carbon accounting and scope 1, 2 and 3. Please explain.
Well, ESG is environmental social governance, about having the right governance structure. I actually got fired from Citigroup because I had a rather big bottle of wine over a dinner with the CFO, the Chief Financial Officer of Citi. He came out from America, visited Sydney for a day on his private jet, the company private jet, his jet. And we're having a bottle of wine. I said, look, I've got a serious problem. I'm here lecturing our biggest corporates in Australia about their governance structures and how they need to have really strong separation of duty between the chairman and the CEO. And yet I'm an absolute hypocrite because Citigroup, the biggest company in the world, doesn't have separation of duties. Most American corporates don't have a separation of chair and the CEO. And I got a serious problem about that. Our board is asleep at the wheel. They got no bloody idea what, the red wine started talking. And I said, I feel like a hypocrite. That's how I got onto the conversation, because he was talking about how I do my job and I think ESG is important. And I stupidly then made the reference that I was a hypocrite because Citi, we don't actually have separation of the 2 most important roles in a company. Right? The only job of the chair is to fire the CEO when the CEO is screwing up. That's their only job.
Right.
Because they're the only one more powerful than the CEO, but you don't want the chairman interfering with the CEO. The CEO is first amongst equals until they have to be fired. And then the chairman must be absolutely rod of iron and bite the bullet. because the longer they let a bad CEO fester, the more damage they can do. And a bad CEO can destroy 50, 60, 70, 80 or 100% of the shareholder wealth in 5 years.
Wow.
No problem.
That you've seen that.
I had a fight with AGL. We took down the CEO and the chair. So anyway, so we spent about a year rolling the 3 longest serving directors of AGL, the chairman, the CEO and the head of nominations to the board. And we got rid of all 3 of them in the end, but it was a massive, massive battle. And my job, like Mike owned 12% of the company, so he was absolutely wedded to that. But 12% doesn't get you removal of a CEO or a chair.
Oh, okay. What gets you, 51%?
No, most investors are sheep. They just follow along. But I was speaking to the major institutional investors.
Okay.
I had a good 20 or 30 or 40% of the
Right.
market alongside working with me. They knew I was not being paid. They knew I had no conflicts of interest. They knew I wasn't being paid by Mike, which I wasn't at the time. I do take donations from his philanthropy now, but I didn't back then, and it wasn't part of the deal. And in fact, I hadn't actually even met them because I had to have plausible deniability. I had to have total separation. I couldn't know what their agenda was, otherwise I'd be breaking the law. But so that was a big part of it. But I spoke to the biggest investors in the world and got them to back me so that we got rid of, and I had a team of 6 or 8 very senior public people working on this. But in the end, we got rid of the CEO. We got rid of the chairman, sorry. And the chairman just threw the car keys on the table and walked out. He goes, I give in. You're going to destroy my reputation. But the reason why I had such big backing from the financial markets was the CEO and the chairman had destroyed 60% of shareholder wealth in 5 years. They weren't just backing me because I'm a nice guy. They were backing me because they knew the CEO and the chair were incompetent.
Through ineptitude?
Incompetence.
Oh,
Total ongoing incompetence. And so they then came back and said, okay, well, hang on, we can't back Mike Cannon-Brook. So these were private conversations, I mean, the biggest investors in the world. And they go, well, we don't know what his game plan is. He's a billionaire. We can't trust him sight unseen.
Right.
So we then wrote a business plan. We got some consultants in. We wrote a business plan really quickly and really thorough. And we said, this is our strategy for the new chair and the new CEO and the board of AGL. And we presented it to the shareholders and they agreed to it. Mike looked at it, goes, oh, I'll agree to that, no problem. And that's what we gave to the new chair. But the CEO didn't fall on his sword. And Mike goes, oh, no, we've got the new chair. We've won. And I go, we haven't won till both these individuals are gone. I will keep it clean. I'm rather rude, but I said, you've got them leaning over their sword. Push the fuckers down onto the sword. Otherwise, we haven't won. And Mike goes, no, I'm going to be friendly in victory, and he didn't push them onto the sword.
Isn't that the sword of Damocles, isn't that the...
Well,
sorry.
Finance is pretty brutal.
Yeah.
You play to win. You don't stuff around and be nice.
Right.
You don't want to be friendly in victory. So my response was, no, we've got to smash the CEO down onto his sword. He's got the sword in his chest. Get him on it.
Right.
Because he can do a lot of damage. Mike, to his credit, is a nice guy. Too nice. And 3 months later, he admitted he should have taken my call and pushed the CEO onto the sword. But that guy festered for another 3 months and did a whole lot of damage. And in the end, we got the wrong chair as a result. So we got rid of the incompetent one, but we didn't get the chair we wanted because someone else came in and grabbed the car keys off the table while we were trying to destroy the CEO. In the end, Patricia left. She admitted after a year that she wasn't the perfect person. And anyway, AGL is now moving in the right direction, but it could have gone a lot faster and harder. At the end of the day, finance is about protecting investors' interests. I wasn't doing it because I had any skin in the game. I had no money on the table. I did not own a single share, and I wasn't being paid a success fee. If I was an investment banker, I would have been paid a $10 million, $20 million success fee, but I did it pro bono. And that's how I got the institutions to back me. But at the end of the day, I'm not there to protect the feelings of the incompetent CEO. My job's to kick the bugger until he leaves.
Yeah, that makes sense.
And leave immediately so he doesn't damage the place on the way out. But we left him festering, and it festered, and they lost a lot of staff while it festered.
Is this a common occurrence that
They're normally not that incompetent. Normally I've gone off track a bit.
But
it's
still
the role of the chairman, and in this case, the chairman had actually taken the CEO. So the chairman sacked the old CEO, put himself into the job, brought in a mate, and Peter Bolton, and the two were peas in a pod. They both were incompetent. They both had to go, and eventually they both did go. But I was having this debate with the CFO of Citigroup, and I was saying, I've got a problem with the governance standards of Citi. And in the end, I said, our board's incompetent, and we ended up having a very long fight about it. And the guy came in the next day and said, oh, by the way, you're not really with us, are you? And I go, no. And he goes, no, you misheard me. You're not with us.
Oh, okay. Bye-bye. In other words,
that's the best thing that happened, because 2 years later, Citi went off the cliff, the GFC. He got fired. 2 years later, I got fired that day. So I got all my stock freed up, and I sold it because I was so annoyed at him.
Wow.
And I sold it $50, and 2 years later, the stock price of Citi, the biggest company in the world, was down to $1.
Oh.
So that's how I do my work, because I didn't actually get destroyed by the GFC.
Wow.
But I've been rewarded all my career for standing up to bullies and standing up to people who think they know better, and when they're incompetent, they still think they're better than everyone else. This guy thought he was the best thing since sliced bread. He was a bloody incompetent.
Is this a personality thing? No, but as in, is that have you always stood up for people or yourself if you've seen an injustice? Is that the kind of
I wouldn't say
nature and nurture thing.
I don't think I'm a saint. I just my job. I was paid to work out whether the CEO was really worth the $5 million a year he was paying himself, and I usually was a male, or were they just incompetent? And most of the CEOs I dealt with were incompetent, but there were brilliant ones like Michael Chaney. I mentioned him in the break. He was my mentor. He was the best CEO I've ever dealt with, and look at the share price performance of Wesfarmers for 30, 40 years. It's been the best performing stock in Australia. But under his watch, it went from, I don't know, $30 or $40 million to 5, 10 billion, 20 billion.
Okay, you've seen it. You've met a lot of CEOs. What makes a good CEO? What's the recipe?
Integrity, honesty. He was brilliant. Right. He was humble, lovely to chat with. I asked him that.
He's a rare individual.
Very, very rare. I loved him. I just thought he was like my mentor. Right. And he was the best CEO Australia's I've ever seen in my life of a big company in Australia. And that's measured by shareholder performance, like Wesfarmers' return on any basis is best performing stock. And again, I'm long Wesfarmers because even the new CEO, Michael's the chairman of it. But at the end of the day, I used to ask him, how are you so bloody good? All the other CEOs I meet with are so pedestrian compared to you. And he goes, Tim, I just hire people who are brighter than me and then leave them to do their stuff. I don't tell them how to do their job. Yeah. He goes, I've got 6 CEOs under me, and each of them runs their own group. They've got their own board, their own advisors, and all I do is allocate the capital between the 6.
That is such good advice. You know, you have to be obviously have certain smarts to be a CEO, and but never wiser words. Always surround yourself with people who are way smarter than you,
and then back them
and understand what their drivers are. Whether they're psychological, financial. Understand. So it's being a good manager of people and understanding people,
and what motivates them.
That's exactly their drivers. Absolutely. Yeah. Well, that's. Yeah, that's a good news story. So ESG, you've explained that. Now the carbon, the concept of carbon accounting. I know it sounds self-explanatory, but it's not. It's a bit more than that.
It's very technical, and there are plenty of experts. I'm a finance guy.
Yeah, but from your perspective,
that's different to an auditor. That's different to an accountant. I was asked to advise a whole group of auditors about the accounting standards relating to Scope 1, Scope 2 and Scope 3. And my comment to them was, be really careful applying your accounting rules. That's what auditors do. They're really, like I mentioned earlier, I respect the role of the auditor. They are keeping the accounts honest. They keep the management honest, the CEO, and they do. I read an annual report in Australia. I know 99.99% probability that the numbers I'm looking at are correct. Just read the detail, read the notes, because what the auditors do will hide the detail in the notes, because they will get fired if they will be liable legally if 2 years later it comes out that they had glossed over something. So they have to sign off. The partner of each accounting firm, now we used to hold them in high regard. Today they're just pigs in shit, like talking KPMG. Like
they've been in the
yeah. But most of the accounting firms, let's not go too far, but I used to think they were better than they were because the accountant had to sign off each year. I sign off that this company is a going concern. It meets the going concern requirement. It can pay its creditors when they fall due. And that was a really heavy sentence. That was the only sentence. Like, I wouldn't even read it because you got a two-page audit statement. You look at the last sentence. This company is a going concern. The auditor has signed away his life on that. And so at the end of the day, it's their integrity, but it's also the law because the partner will be sued, not the Mickey
So they're
Mouse.
Legally liable.
Yeah. And they have to be because I rely on their numbers.
Of course.
And so what they do is they'd hide the detail in the accounts. That's what I say, read the annual report. You can't, like, that statement was critical, but then you go through and look for the detail. What's been manipulated? Because, like, one of my conversations with Michael Chaney was, why do you always never write off abnormal losses? All my other CEOs have abnormal losses, extraordinary losses each and every year. If it was deemed to be a very big number out of the ordinary course of business, you could write it off as a one-off loss. All my other CEOs used to write off billions of dollars below the line, and then they'd ask the market to put a PE on the above-the-line profits. And Michael would never have a write-off because we're ultra-conservative. We never have things overstated in our books. Wesfarmers in the 30 or 40 years I've looked at them never had big abnormal losses. They always had abnormal gains. And when they did, they'd do a special dividend back. They'd pay tax and they'd do a special fully franked dividend shareholders. But
this is a super prudent approach, isn't it?
It was ultra conservative. So you knew every dollar of profit in Wesfarmers was very real and it was probably hiding $1.20 of profits.
Wow.
Whereas the Pacific Dunlops, the Howard Smiths, the Elders IXLs were fabricating 50 cents and pretending it was $1 and getting you to put a PE, like you put 15 times on $1. Well, 15 times on $1 is twice as much as 15 times on 50
Forgive my ignorance. What's this multiplied by 15?
Price earnings multiple.
Oh, okay,
So the value of a company
Yep.
is the earnings multiplied by the PE, the price earnings multiple. So if they earn $1 and you're putting them on a PE of 15, then the stock price will be $15. But if the earnings are inflated by 100%, so they're actually 50 cents, then the share price will go down by 50%, but it'll go down more because the PE will go from 15 to 10, so the share price will go down 65% because you've been deceiving the market. And in other words, the CEO's got to go at that point. Whereas Michael would always be reporting $1 and it'd really be $1.20. Now, he wasn't lying. He was just being ultra conservative so that you knew that next year the profits, everything else will be higher. But it was the conservatism and of the integrity, which ultimately comes down to it, and the longevity. He was investing for the long-term interests of shareholders, whereas most of the other CEOs were just investing to lie for long enough to or they'd believe their own crap as well.
So you can, and this is the thing that, and I've had this conversation with a few people. The old way of doing business has been a complete and utter bastard and short-term thinking, but you can still make money and maintain a certain moral, ethical ideology and an approach to sustainability and still do okay. Can't you? I mean,
you can.
Please tell me you can.
You can, and that's where Wesfarmers, another Michael. I learnt a lot from Michael. I used to say to him, "Why do you always start every investor briefing with your KPI, your lost time injury number?" I go, "I'm a finance guy. I don't care how many workers got hurt. I want to know what your profits were." He goes, "I'm not reporting that to you, Tim. You notice all of my top 10 direct reports are sitting in the front row every time I present my numbers, and you're sitting next to them. I'm making them know that the number one thing I'm reporting to you, you might be a bastard, but I want them to know that if they kill someone, they're screwed. If they hurt their workers, that's my number one performance indicator, KPI. Key performance indicator." And so he says, "I'm not doing it for you. I'm doing it because they're sitting. I'm talking to you, but I'm really talking to them." every Michael Chaney, you look at his results, it used to always start with his KPI, lost time injury, LTI. I had to learn what, like, industrial companies don't kill people. BHP, Rio, Glencore kills a lot of people. Industrial companies, they have much better safety.
We even have at Greenwood. We even have a near miss register. We go one step, which you know, I mean, nothing's happened, but something nearly happened.
Correct. And so what Michael would say was, don't just quote what the number is, show the long-term trend. And as long as it's trending down, you get better each and every year. And so that's the trend. And that's what he explained to me. He said, Tim, I wasn't actually giving you that number. They thought I was giving it to you, but I'm really giving it to them. That was, I want to sleep at night. And if I've killed someone, I can't sleep.
Oh, he sounds a remarkable
He was
fellow.
a lovely man. I like on a pedestal compared to the numbnuts I used to cover, like John Elliott and Alan Jackson, and I won't go through Philip Brass, another incompetent idiot.
Oh, no,
Anyway, look how much shareholder value he destroyed. Like, he was the worst performing company in the top 50 of Australian listed companies for 15 years in a row. He wasn't CEO the whole time. He did eventually get removed on, but they were just incompetent as managers, just had no idea. But we're off topic, but again, it's about what does the CEO evaluate? What's his or their main... So I think you can do the right thing. I do wonder how a fossil fuel CEO sleeps straight in bed at night. Like, at the end of the day, what I realise is, I mean, you look at the board of Woodside, and every one of them are climate deniers. They have to be, but the group like Michael Chaney. I put him on a Saint Michael, but he took a lot of varnish off when he became chairman of Woodside. He started drinking the Woodside Kool-Aid, the climate deniers. By the end of 8 years as chairman of Woodside, he was a climate denier. Now, I know I work with his daughter, Kate Chaney, who's brilliant, community independent. But at the end of the day, Michael drank the Kool-Aid of Woodside. He went in because he was the most experienced executive in Western Australia. Woodside was the biggest company in Western Australia, and he got made chair of that. But at the end of the day, he had to accept, and he was surrounded by climate deniers. The CEO, the CFO, I'm not having a go at any of the junior staff in Woodside, but they have to realise they're helping destroy the planet, and they're drinking the Kool-Aid. They drink the company Kool-Aid. They have to. There's no way you could live in that company knowing that every day you're facilitating the destruction of our planet, along with Woodside, Santos, Chevron, BP. I mean, I can name them. Glencore. They're all helping destroy the planet. But at the end of the day, what they're doing is actually preventing the government putting a price on carbon pollution, because the minute they put a price on carbon pollution, the companies will be forced to actually either pay the price or stop polluting. And so that's where Scope 1, Scope 2 and Scope 3 comes in. So Scope 1 and Scope 2 are within the company realm. Scope 2 is external to the company, but think of electricity. There's a huge amount of emissions in general electricity, like 50+% of Australia's electricity comes from coal at the moment. It used to be 60, used to be 70, used to be 80. It's quickly going down to 10 or 20% over the next 5 to 10 years. But there's a huge amount of emissions. That's Scope 2, because I run an aluminium smelter, I buy the electricity in. So the coal plant just up the road makes all the pollution, I buy the electricity. That's Scope 2. I can't make aluminium without electricity, but it's not my direct emissions. My direct emissions, the second biggest source of pollution in an aluminium smelter is the burning of methane gas. So they buy methane, they help use it in the process. I'm a finance guy, I don't know how to run an aluminium smelter, but they use a lot of methane, but they use 50 times as much electricity. So they're...
Alcoa.
Or Tomago aluminium, Alcoa. Alcoa is more bauxite and alumina, whereas Tomago is aluminium. So aluminium is congealed electricity, but you also use some some methane gas. So Scope 1 is the methane gas. Scope 2 is the electricity.
Yes.
And so like the company's, Tomago's direct footprint is relatively minor. Their indirect footprint, because they buy all their power from the Bayswater coal-fired power plant, the second biggest coal plant in Australia, and the emissions are all of the emissions from Bayswater are effectively tied to the making of the aluminium. But if I'm BHP and I'm doing iron ore in the Pilbara, I use a little bit of electricity, a huge amount of diesel. So I buy the electricity, and the fact that it's powered by gas, methane gas, so it's relatively high emissions, but 60% of BHP's Pilbara emissions come from burning diesel. Direct diesel imported from the Middle East, super expensive right now, huge emissions footprint. You could electrify it, you could decarbonise it tomorrow. BHP's decided they don't want to do it, but BHP's board says it doesn't matter because our Scope 1 and Scope 2 emissions are 2/5 of stuff all compared to the emissions that come from taking the iron ore and the coking coal that they take from BMA, and they sell it to China, Japan and Korea. And the emissions profile of the steel plant that puts the coking coal and the iron ore together is 20 times the footprint of the Pilbara iron ore.
Oh, I see.
So Scope 3 is 95% of the emissions for BHP.
Oh, okay.
So BHP says not our problem because under the Paris Agreement there's a legal border around Australia, and as soon as we export the iron ore, the emissions become the country of not our problem. Scope 3, not our problem. Now, it is our problem the minute China says we're going to honour our Paris Agreement, we're going to decarbonise our steel industry. By the way, your iron ore quality is low quality. It's not good for decarbonisation. We need to pivot to high quality iron ore, and we need to do direct reduced iron, and we need to do green iron. You don't produce any of those because you do dig and ship. You do no value add, BHP. So we're going to pivot. And we're going to pivot to Guinea in Africa, or we're going to pivot to Canada, or we're going to do scrap steel. And eventually we don't want to buy the Pilbara iron ore because it's low quality, high impurity, and really high emissions when you stick it in a blast furnace in Japan, Korea, or China. That's all Scope 3. So BHP says, not our problem. It is their problem because ultimately the world's going to be unlivable, or China is going to decarbonise the steel industry. Now, my money is on China decarbonising the steel industry, and when they do that, they're not going to want low-quality, high-impurity iron ore. Now, BHP makes an average 65% return on capital employed in the last 5 years in the Pilbara iron ore. So I said Bunnings was the best business in Australia in the last 20 years. In the last 5 years, Pilbara iron ore is the best business. 65% per annum return on capital employed. And BHP turns around and says to me, Tim, why would we go and take the highest return on capital employed business in Australia and go and invest in a really low margin, high capital cost steel fabrication plant, a steel processing plant, or a direct reduced iron plant, or a green hydrogen powered iron plant that's really high capital cost, really low profit margin? Why would we take a beautiful rivers of gold business, 65% return on capital from per annum? Like, that's obscene. The cost of capital is less than 10, and they're making 65, like making out like bandits.
Yeah.
Oh, that's right, they are, because they're destroying the planet. But they're saying, well, not our problem. Scope 3, it's China's problem, it's Japan's problem, it's Korea's problem. If those guys want to fix the planet's problem, not our problem. In the meantime, we're making out like bandits. There's no price on carbon pollution, not our problem. So the board's sitting there smug as, delivering huge fat dividends and big royalties, and they pay a lot of corporate tax in Australia. They do, unlike the gas industry, pay a lot of royalties. Like $10 billion of iron ore royalties goes into the WA government's pocket each and every year, so they're complicit. But Roger Cook, the Premier of WA, is going, hang on, we've got these rivers of gold, $10 billion of dividends a year from royalties from BHP, Fortescue, from Rio Tinto and from Hancock. But if China actually honours its Paris Agreement, then that rivers of gold is going to dry up over the next 10 years.
Wow.
And the Premier of WA has a fiduciary duty or a role to actually look after the state's best interest, not the short-term myopic best interest of the CEO of BHP.
Right.
So the BHP CEO doesn't give a toss about climate change. I think he's got to be a climate denier to know what he's doing. He's going, but unfortunately his replacement doesn't look like he's any better. The Four Corners program outs them very, very categorically as being climate deniers walking back. They just have been bought and paid for, maximise their dividends, maximise their bonuses each year, and leave the problem to someone else. But there's a legal construct there. It's scope 3. It's not our problem. And there's a flaw in the Paris Agreement. But the Premier of WA, Roger Cook, is saying, I care about the state of WA. Now, I don't think he's any saint. He's not Michael Chaney. But what he's doing is saying, look, we need to, as the state, invest in industries of the future. We need to take all the profits from the industries of the past, LNG and iron ore. We need to invest in industries of the future. China is going to deliver on its Paris agreements. China is going to decarbonise steel. We need to provide what China needs in 10 years' time, not what they need today or 5 years ago. So Roger Cook's now talking about green iron and green steel all the time. And BHP refuses to do it. They go, why would we invest in a capital light, super profitable business, 65% return on capital employed? They say that all the time. And for 5 years, it has been 65. Why would they go and dilute that business by investing in the future? Because they're operating for the myopic short term and the holy dollar. The bonuses. Does Mike Henry care about BHP's
just
profitability?
Nationalise them. That'll soon fix them. Oh, I'm joking. I'm joking.
We had that debate last week where the head of the ETU proposed building a national power business, and the AFR very politically said, he's proposing to nationalise the Australian energy market. Actually, did you listen to what he said? He did not once say he was going to buy AGL, Origin, Energy Australia, or any of the other massive. He was going to compete with them. He was going to create a public institution to compete with the private. That's not nationalisation.
No,
that's about bringing public interest, public alignment, and making increased competition, not nationalisation. But I do believe in free markets, but at the moment we've got a totally flawed market where the single biggest externality is carbon pollution, and there is no real price on carbon pollution.
And that's the issue, isn't it? There's no real price.
There is no way the $4.5 trillion of superannuation in Australia, and it's a technical term, a shitload of capital. We have the fourth biggest super system in the world. It's going to be the second biggest super system in the world by 2031, like within 5 years. And yet it's all sitting on the sideline, unable to invest because of the sole purpose test, because Jim Chalmers can't get a whole of economy price on carbon that's credible in line with its real costs. $35 for the worst 215 plants in Australia. It's addressing part of the problem. It's better than we were 4 years ago, but it's got to be deepened, it's got to be broadened, and then what he's got to do, Jim Chalmers, Katie Gallagher, the finance minister, work with Minister Bowen, the Environment Minister Watts, and the Industry Minister, Tim Ayres. They've all got to work as a cabinet, so at least they do work generally as a cabinet, and they've got to come up and say, right, we need to say that the price of carbon at the moment is $35. That's the ACCU price, the Australian Carbon Credit Union. We want it to be $100 in, 14 years' time, maybe $150 Aussie. Now, put that into euros, that would be about where the euro carbon price is today. But
so you're not talking about a tradable commodity, though, are you?
Yes, it's
but if you are, if it's a tradable commodity, therefore it is subject to market forces, therefore it's speculative. So how could you say it's going to be $100 in X amount of time?
The government...
No,
that's a fair point. The government sets the rules and then get out of the way and let the free market work. So...
Okay.
Bear with me for one more minute.
Please.
So if Minister Bowen gets a massive big spine and says, right, I'm going to bring in one reform for the safeguard mechanism, this is it. Put a floor price on the ACCU price and have it ratchet up 2% real each and every year.
Oh, gotcha.
And if the price hits that floor, the government will sit there and buy all of the ACCUs that are available at that floor price. They'll underwrite the market effectively, and then they'll just retire them. And the world's a better place because there's less carbon.
Now I see. Yeah, no, okay. Now
right, because the government's standing on behalf of the Australian public and, more importantly, the Australian environment, which we all die without a livable planet. So the government needs to do that. Now, do they want to do it for Scope 3 or do they want to do it for Scope 1 and Scope 2?
Ooh, whatever has the biggest impact.
Well, then it would be do scope 3. But why should we fund the Chinese, the Japanese and the Koreans?
Okay,
so that's where scope 1, scope 2, scope 3. So
Right.
BHP's job is to work with their customer. So the Porter's 5 forces. BHP should be working with its customer to help its customer reduce its scope 3, because BHP's scope 3 is its customer's scope 1 emissions. The steel plant in China is the one who is BHP's scope 3 becomes the steel plant's scope 1 emissions. They take the iron ore, they take the coke and coal, they put it together, they burn it in a furnace, and that's where all the carbon dioxide comes from. But BHP is Australia is the second biggest steel supply chain player in the world. And this is where I get really annoyed when people go, it doesn't matter what Australia does. We're 2/5 of fuck all. We're only 2% of world's emissions. Rubbish. Because steel in China, 16% of China's national emissions come from the steel sector. 8% of the world's emissions come from the steel sector, but China's got more than half the world's steel production.
Right.
So
proportionately, yeah, wow.
they are huge. Like 54% of the world's steel production comes from China, but 54% of the world's iron ore comes from Australia. 54% of the world's coking coal comes from Australia. So Australia is the second biggest player in the world's steel supply chain by a country mile. There's no other country that comes close. Brazil would be a very distant third, but we're number 1 in coking coal exports, number 1 in iron ore. China is number 1 in steel production. So Australia has to work with China to jointly solve the single biggest source of emissions in the world outside of electrification. And we can do it, but only if we have a Team Australia approach that works with our biggest customer in the world, that is China. So it's the biggest threat to the Australian industry, but it's the biggest investment opportunity. It's the biggest export opportunity, the biggest employment opportunity in Australia this century is working with China to jointly decarbonise the steel sector. And that would involve massive, massive wind projects in the Pilbara, massive solar projects in the Pilbara, the biggest batteries in the world in the Pilbara, the biggest grid in the world in the Pilbara to power the biggest green hydrogen, green iron, DRI plants in the world in the Pilbara. Because if we don't do it in the Pilbara and in Whyalla and in Midwest WA, then they're going to build them in the UAE, in Saudi Arabia, in Brazil, in China itself, and in Canada.
And they will be left out.
And we'll get no value add. But worse, we've got the worst quality iron ore in the world, second only to the Indians who don't export it. We've got really big impurities. Like the impurities in our iron ore.
So our cost to process is a lot higher.
Much higher. So people will prefer Brazilian or Canadian or Guinea iron ore to Australia if they have a value on carbon. So at the end of the day, how do we do that? At the end of the day, China's a communist state. They will just do it. Like the Chinese president says, you will drive decarbonisation. The question is, how fast do you want us to do it, sir? Right? And he's a man and he's a dictator and he will just jump. How high would you like me to jump and how quickly and how many times? They will do it. I got no doubt. I follow China. I've travelled with your boss around China. It is just inspiring to see how fast they are moving. And we travelled around on very fast trains that go 350 kilometres an hour for 3 hours straight. And by the way, you haven't even finished your coffee and sent one LinkedIn post and you've travelled 3 hours and 1,000 kilometres across the most heavily populated country in the world. And you've done it without even blinking, without shame. It's just the trains there. People go, it's a third world country. Rubbish. It has the highest quality infrastructure in the world, and you can see it best in the trains that they run. They are unbelievable. But thinking that China's going to abrogate its Paris agreements, well, I don't think they'll do it for Paris Agreement alignment. They'll do it
for China.
They'll do it for national interest. They'll do it for energy security. They want to dominate these industries of the future. Oh, by the way, I'll just remove. They want to. They already dominate. They're 54% of the world's steel production. They're 50% of the world's aluminium production. They're 90% of the world's polysilicon production. They're 85% of the world's solar module production. They're 70% of the world's batteries. They're 90% of the world's rare earth refining and processing.
They must be laughing in America.
They are laughing at Trump. They think the problem they've got with Trump is he's so unpredictable and he's destroying America so quickly. An unstable enemy is a real problem. They'd much rather a slow decline of America than the chaotic, destructive
Yeah,
force.
they don't know. Are you a golfer by any chance? I'm not, but a friend of mine, an old schoolmate, sent me a book called Commander in Cheat, written by a sports writer about how Trump cheats at everything and by default cheats on. It was on golf, and then of course it's absolute. You couldn't believe it. It's like twice as bad as I thought it would be. Look, I'd like to chat a little bit about your business, and because I got it wrong at the beginning, calling it the wrong thing. So can you just sort of outline the name of the business and how it works and the fact that you're getting philanthropic donations and how funding, yes. Yep. So donations and funding, it's a little bit different, isn't it? Sorry. Yeah, okay. Yeah. Semantics. Yeah, but please, Tim.
So, again, I was a managing director, head of research at the time, the biggest bank in the world. Thanks to Todd Thompson, I got fired while the shares were worth a lot of money. It was literally the biggest bank in the world. I'm trying to use my finance experience to add value to the environmental movement, to add better substance to it. And it came from a conversation I had 15 years ago with a senior Australian strategist in the environmental movement. And I said to him, look, I don't know what you are really doing, because as head of research at the biggest bank in the world, I've never read an environmental report. I have never met an environmentalist, and it's had absolutely no impact on the financial markets. So whatever you're doing, good on you, but it's having no impact. And he hired me on the back of that because I was so rude to him. And he goes, well, could you, and in the end, it comes down to language. They speak absolutely passionately. Like the environmentalists I work with are unbelievable people, but they speak a language of their own. It's a bit like finance has its language. Doctors have their language. Engineers, it's the jargon. And if you can't talk in the language of the person you're speaking to, they're not going to understand it.
Yeah, you're not part of the group.
So I set up Climate Energy Finance 4 or 5 years ago. Before that, I co-founded IEFA 15 years ago. And so it grew from 3 men and a dog to 60 or 70 analysts around the world. It became unmanageable for me, and it became bigger than Ben-Hur. So I left IEFA and founded another think tank. We only look at Australia and China. IEFA, I was heading up all of Asia. So we had South Asia. We had a really big team in India, and I spent a decade working on India and Pakistan and Bangladesh, as well as China. Although IEFA was American founded, and so it was impossible to have staff in China. So when I set up Climate Energy Finance, I said, look, I don't want any American involvement. And so my funders came with me. So there's the same funders for the last 15 years. And I only cover Australia and China, and it's only a very small business. I'm the sole director of it. I get to say what I do. My funders either fund me or they don't. They really like the work I do, so they fund me, but they don't have any say in what I work on other than they like what I've done for the last 15 years. That's freedom. It is total freedom. It's a real privilege.
It is.
I'll do a hat tip. Graham Wood, for 12 of the last 15 years, I've never disclosed who he was. Graham Wood, the founder of What If, retired, and he's been funding me for 15. He and his wife Anna have been funding me for 15 years. And one day we're having dinner together, and I was joking, Graham, why do you not want any recognition? You've been funding me for 12 years. And his wife just starts laughing, and Graham turns around, what do you mean? I thought you were just you were so embarrassed by me, you didn't want to acknowledge me. I go, you've got no problem with me disclosing.
He was joking though, wasn't he? He wasn't joking.
No, he wasn't joking, but he knows I'm pretty arrogant. And I go, right, you're going to be my honorary chairman. And he goes, well, so long as I don't have to do anything other than have a beer with you once a year. I go, well, you get access to my accounts. He goes, yeah, I'm not going to read them. I'll go, well, that's your privilege. You're my funder. Anyway, and his wife was just laughing, and afterwards she taps on and she goes, Tim, he'll wake up sober tomorrow morning and he'll renege. He doesn't want to be chair of anything. Like honorary chair. And anyway, I held it to him. He did try and pull out the next morning. She knew her husband far better than I did. Graham, he goes, I don't want to be held responsible for what you're doing and having to oversee. And I go, look, it's an honorary role. At the end of the day, you get the accounts if you don't read them, but at the end of the day. So he's been funding me he and Anna have been funding me for 15 years. More recently, Mike Cannon-Brookes' group, Boundless, has been funding me. But again, the fact that I was working with Grok, which is the investment arm of Mike Cannon-Brookes, their family company, and they were far more honourable than I was, as we discussed in the AGL case. Like, I did meet Mike, and all he wanted to talk about was educating women in third world countries, lift women out of poverty and educate them and empower them. And that was his number one mission in life. And so I spent 3 hours talking to him. That's the only time I've ever met him. And he's a lovely man. The fact he didn't want to talk about my passion, which is climate and energy, he wanted to talk about educating women in third world countries and lifting them out of poverty. Anyway, so he's a very honourable man, but I'm willing to take donations, funding from them, because it's not tied in any way. They don't.
So do you use some kind of selection? I'll rephrase. What selection criteria do you use when someone approaches you? You go, hey Tim, I want to fund you, and you go, okay, well here's the checklist. Is that what you do?
Yeah, it is, and it's my own checklist. I told Mike Bloomberg to stick it. I didn't want his money. His charity came in and said, I'm doing some great work in India. Would love to fund your... So I had 10 analysts in India, and they said, we'd love to fund you. And I said, no, you're really bureaucratic. You require bury me in paperwork. You've got so much oversight, and you'll tell me how to do my job. I don't want that. I'm independent and arrogant enough. I don't want that oversight. Anyway, they came back a year later. And I said, just piss off. When you're willing to give me the check without any conditions, then I'll take it.
Right.
They came back the next year. We really like what you're doing. You've got a special niche, which is finance, which is what the environmental movement needs. We'd love to fund you. I told you before, there are no conditions other than I will do whatever I want with the money, and I will show you how I spend it after the event.
Yeah, right.
They pissed off again. And then the third year, they went, okay, the rules are we get absolutely no say in what you do. Okay, we'll fund you.
Wow.
So
they came back 3 times. Jeez.
Yeah, he was trying to deploy billions of dollars. And Mike Bloomberg, a very big philanthropist. But with philanthropy comes a requirement that they actually do governance properly. Like, you can't be a think tank or a charity and have poor governance. Many of them do, because they pay people way too little, and they don't have, or they expect the people are all going to be honest. But there's always bad apples everywhere. There's always one bad apple out of 100. Most 99 will do the right thing, but when you've got Mike Bloomberg literally offering $1 billion philanthropy a year, if you just steal a little bit, one person will do that. Anyway, I'm not like that. I give them total access to my accounts. I send them to them, whether they read them or not. It's not my problem. They have them there. But at the end of the day, I also run a very small shop. I've only got 5 or 6 people working for me. We did get up to 8 or 9 2 years ago, but I'm not a very good people manager, as all my ex-staff would say. But at IFA, we had very low turnover because everyone was on a mission. Everyone was working altruistically. They weren't working for the big bucks. If they were, they'd work in finance. But so they're very, very motivated people. And I've found it really interesting. But it's about how do you take the public interest of the environmental movement and put it in a language that actually resonates with finance, because it's about moving the holy dollar to actually solve the problem.
Yes.
In China, the president of China just says, we are going to do it, and they
do it. Yeah.
And they've built the biggest battery companies in the world, the biggest solar companies in the world, the biggest wind companies in the world, the biggest EV companies, the biggest steel companies. They're built the biggest in everything that they set their minds to. It's staggering to watch what they do, but democracy is the worst form of government other than every other type of government. So when I'm not doing my day job, I'm a volunteer for the TEALs, the community independents. They don't like calling themselves TEALs. I do, but that's partly why I can compliment the Albanese government occasionally, because I actually don't vote for them. I vote for the community independents. They have integrity, climate, intergenerational equity as their guiding principles. But at the end of the day, we need the system of government in there. And I think I've probably just totally lost my train of thought.
All right. Well, I'll help you out on that, because we'll jump to something else, and obviously it's been in the news. There's 278 of them currently in Australia as of yesterday. I checked, and that's data centres. Obviously, there's a lot of money involved. There's a lot of overseas ownership. There's not going to be less of them. How are we going to address these monumental energy needs? Let alone, we won't talk about the water side of things. That's a podcast in itself. What's your views of the data centres in combination with the transition to EVs, which will require a huge amount of additional infrastructure? Please.
We've got a lot of challenges. At the end of the day, what we're talking about is electrification when we're talking about transport. So
Yes.
we're going from a very inefficient internal combustion engine to a very efficient electrical motor.
Yes.
A battery-powered car. The energy efficiency is dramatically better, but what we are going from is what used to be cheap oil, imported oil, and we're needing electricity. So electrification is the absolute theme of the decade for energy markets. And what you've just highlighted is two of the biggest areas of electricity demand growth are EVs and data centres. Electrification of industry is coming, and that is going to be another big area, but for 20 years, the Australian electricity system was stagnant. It did not have any volume growth whatsoever. But in the last 2 years, electricity demand started to grow because EVs are coming and now data centres are coming. And so everyone's forecasting that electricity growth is probably going to be 3% per annum over the next 20 years, whereas it's been 0% per annum.
Is that your assessment?
That'd be mine.
Yeah, okay.
So, but 3 is not 8.
Yeah,
so we
right,
need to
right.
put it in perspective. We're not talking about 8% per annum for 20 years in a row. The reason being everyone's saying, well, hang on, there are literally 50 gigawatts of data centres wanting to be built in Australia right now. There are 50 gigawatt of proposals.
That's right.
How many of them will get built? The reality is there isn't enough water and there isn't enough electricity and there's not enough demand to justify 50, but there's probably enough demand, I don't know, pick a number, 10. Like 10 is going to be far more accurate than 50, even though I pulled both out of my arse. It's going to be a lot more than we've got today, like up 5-fold, most likely, but not up 50-fold. So what you've got is a land grab. And the critical point you mentioned is a huge amount of global capital, unlimited. Like we're talking about hundreds of billions or trillions of dollars of capital going into this sector. Well, if there's so much, and not if, there is trillions of dollars of capital coming, I could build you your company could build me a solar plant in 1 year. You could build me a battery in 1 year. Okay, maybe through Australia's bureaucratic system, it'll take you 2 years to get the approvals.
Correct.
And then it'll take you 1 year to build it.
Yep.
Okay, so that's 3 years. How long will it take me to build my data centre?
I don't know.
Probably 2 years. Like we've still got to get an approval. And the approval
those
for a data
approvals will be rushed through.
Well,
if you follow the American situation where they're bypassing the environment.
And I'm going to swear again, but Trump actually said one thing sensible this year, and only one, but he said, we've let the data centres rule and the consumers are now paying the price. Electricity prices in America, he actually did say that.
Did he really say this?
Yeah, we need to actually put some limits on data centres. Now, 80% of the data centres in the world are in
reactive
America.
as opposed to being proactive. God damn
Exactly. But what he acknowledged was if you don't legislate and regulate the industry and you let the robber barons, or the IT trillionaires, vested self-interest, then they will just build data centres and they'll pay the highest price for water and electricity and everyone else can go screw themselves.
Yeah.
Electricity prices are going up double digits in America and it's got massive inflationary impacts on the economy. So you've got an investment boom that's got massive backlash. But America is leading the world, it's not a positive. They're the biggest developer of data centres in the world. Australia, Sydney and Melbourne are two of the biggest cities affected by data centres. But why do they all need to be in the middle of the CBD of Sydney or Melbourne? They don't. Half of them need to be close to the demand. Half of them can be in the regions. We can spread them out. We would actually be better off South Australia and Western Australia so that your latency is low, but then also your a WA data centre can operate on solar 3 hours after the sun set in Eastern Australia. So if we actually have some overriding principles, which fortunately I joined a coalition about 18 months ago of 10 think tanks and environmental groups and renewable energy players saying, let's put some principles on. So proactively say what the rules are. And we lobbied the federal government and the state governments, primarily the federal government. Fortunately, Minister Ayres and Minister Bowen said, that actually looks sensible. Let's get ahead of the wave and put some If you're a data centre, you've got infinite amount of capital. What can you build? An infinite amount of renewables. Renewables, okay, planning approvals aside, are just financial instruments. Like, you give me $1 billion, I can go and buy a whole lot of batteries and solar modules in China. I can import them and I can get them assembled there, assembled by backpackers with a couple of electricians overseeing them.
Yes.
Right? They're not skilled labour. And we're not talking commercial, industrial or rooftop. We're talking like that you need electricians. That's really skilled labour. But in a field, it's panels in a field, as the head of the ETU, Michael Wright, said last week. Okay, you need an electrician watching like a hawk, making sure no one gets hurt, making sure that it's done properly. But 10 unskilled backpackers, and that's what usually they are. I'm not trying to be rude. At the end of the day, it's not the highest skilled labour in the world, but and it's transient work. You're only doing it for a year. But if you're doing a solar module project here, and then you do one next year and then another one, then it can actually be a never-ending project of construction. At the end of the day, money is no limit. We've already heard that. The biggest companies and the most powerful companies in the world have unlimited capital and it's a gold rush. Well, what Minister Ayres and Minister Bowen have said, if you want to build a data centre, you must buy the electricity. You must underwrite long-term power purchase agreements for firmed renewable energy. And most of my peers would say it's got to be 100% renewables. I'll go with 90, 95%. Like the last 5% can be a gas, a really expensive gas plant, because if it doesn't operate much of the time, the pollution's two-fifths of bugger all. But at the end of the day, they do need firmed power 24/7.
Yes.
They need to have some flexibility in there. But they can use geographic diversity to make sure that it's not all 100% 24/7. At the end of the day, good engineers, good planners can accommodate that, but you say you must enable your data centre is going to be built and operating for the next 25 years. How about you sign a 25-year PPA, power purchase agreement for your wind, your solar battery? Now, if you're trying to sign a PPA for a wind farm and it's got to be new, it probably won't be operating for 5 years.
Good point.
So you say, okay, I need you to sign a PPA for a wind farm, but in the meantime, we will manage it so you can buy electricity until the wind farm's operating, but you've got a 5-year limit. And then the government's got to pull their finger out and make sure that we actually get wind farms approved and built. But solar is a lot easier.
Absolutely.
Firm it with a battery. It's
Yes,
far more
yeah,
predictable.
yeah.
Built a third of the time. It can be done more distributed. There's not as much pushback on solar as there is in wind. And by the way, wind PPAs are about $100, $110 a megawatt hour. Solar down at 50. Put in a battery, you'll probably know these numbers better than me, 80, 90, but it can be fully firmed with batteries. And we're now talking 4-hour, 6-hour,
Yes,
8-hour duration batteries. Like last time I checked, the evening's only 10 or 12 hours. You can use a battery to firm the solar, use a bit of wind and a bit of electricity from the grid. You could decarbonise 90% of your power needs, but if you're building $1 billion data centre, you'll enable $2 or $3 billion of batteries, wind and solar, but you make sure it's new and you make sure you sign the PPA, because those data centres are totally bankable.
Yes.
What we have a problem is a planning approvals problem, and we have a lack of bankable offtake agreements for the long term. You build a data centre, you're going to be there for 20 years. You can sign a 20-year PPA, and even Australian Super or the Future Fund would bankroll infrastructure that's got a 20-year PPA with a guaranteed tenant. And so therefore you'll get the renewables. Now, you won't get it all overnight, but the data centre doesn't get built overnight. You just say, okay, there's a grace period where if the wind, we want them to do 30% wind, 70% solar or 60% or 5% from the main grid or whatever. Bring your own, 90%, 95%. It's all got to be new. It's got to be firmed by batteries, and you've got to do some in the region, some in the city, so we get around the latency issue. again, I'm a finance guy. I can make it sound easy, but if I give you $1 billion, could you get me a solar project?
Probably.
If I gave you another $1 billion, could you get me the world's biggest battery?
Absolutely.
Right? If I gave you $2 billion, could you get me half a wind farm?
Absolutely. And you get a nice Christmas card as well.
Yeah, exactly. It's fun,
Wow.
but we're talking about like, that is the enabler for
Yeah.
if people want to build a data. And by the way, you said water is a different issue. 10 data centers need 1 desal plant. Each of them needs a tenth of a desal plant. If water's so bloody precious, which it is in Australia, make them buy a desal plant. By the way, we've got an unoperating one up in Sydney. I think you guys have one down in Melbourne as well.
We do.
Well, just buy a tenth of it. And by the way, run it on renewable energy. That desal plant can run on wind and solar because it only needs to run 50% of the time. It's been sitting idle for a decade. At the end of the day, but a data centre doesn't need a whole desal plant, but it maybe needs a tenth of one. Now, when I talk to Sydney Water, and I'm from Sydney, sorry, show my bias, but I have talked to Sydney Water, and they said the big problem is the amount of pipes we need. It's not the desal plant. Make them bring their own water, but we actually have limited number of pipes, and if they start using all the pipes, then your rates are going to go. Well, actually, it'll amortise it'll allow you to build some new pipes, but make sure they tell them where you want the data centres, or tell them where they can't build them because there aren't enough pipes. In other words, a bit of city planning, go back to my son's new career. At the end of the day, that's what Minister Reyes has done. Federally, he said, let's have some overarching, and by the way, let's hold the New South Wales Premier and the Victorian Premier to account because both of them are competing against each other, and the WA Premier, they've got the land grab. They're rushing to get the money in the door their state. We need the feds to say, well, I'm ambivalent. I want the money in the door in Australia. I really don't care, but I actually want it spread around a little bit.
Yes.
And I want it to actually not screw the Australian people and the Australian environment in the process. I don't want data centres in the Southern Highlands of Sydney running on diesel gensets, which is what they're building right now. You go in the middle of a war in the Middle East where the Prime Minister of Australia is banging his begging cup every day, begging for diesel from China, from Japan, from Malaysia. Why is he begging for diesel to power data centres? Surely he could just rule that they actually need to bring a battery. And you can build a battery, the biggest battery in the world, thanks to China. You can build it in Australia in 1 year. We've got to do really fast strategic approvals, and we've got to consider fast and effective consultation, and we've got to maximise the value of the grid 24/7, and that's where batteries are the biggest disruptor in the world, because it means we don't have to wait for massive new greenfield transmission lines to be built. You build the world's biggest battery, and by the way, Australia is building more batteries than only every other country in the world other than China and America, and last time I checked, we're a tiny country compared to them. But we're the number 3 battery market in the world. We can build the biggest battery. And by the way, we're building 10 of the biggest batteries in the world right now. We could build another 10 and another 10 and another 20 because they're all just manufactured product, and China's doing them at a third of the price that Europe's doing them at, and at a quarter of the price that America's doing. And by the way, China's our number 1 trade partner, and they want to work with us. They actually, I talk to the ambassador from China regularly, and he goes, Tim, we want to work with your country, but if your country wants to keep poking us in the eye, we will go elsewhere. And when you're the second most powerful country in the world, it's probably sensible the Prime Minister of Australia and the Foreign Minister get that message and understand it. Now, I have talked to Penny Wong, and she know my job's to be firm against China. And I go, they're our number 1 trade. She said, Tim, talk to the trade minister. His job's to be besties with the China, and he is.
Wow.
I've watched him. I don't like him personally because
Don't say
no. He screwed the Teals on the donation reforms.
Right.
But as trade minister, I think he is brilliant. I watch him with the Chinese ambassador, and the two of them are besties. It is beautiful to see. Whereas Penny Wong, the foreign minister, is cold as, and her job is to be strong because China respects strength. So we got the bestie and the trade minister. We got Penny, and I'm impressed with both of them. They're both serving Australia's national interest very, very differently. But I did speak to the senator, and I said, I need you to be more positive about China. They're our number 1 trade partner. She said, Tim, it's not my job. But talked to the guy next
Wow.
door, and I walked, who's the guy next door? And of course it was the Trade Minister, Don Farrell. And so I'm actually pretty impressed with Don Farrell, and I'm impressed with Penny Wong, and I'm impressed with the Albanese government, other than the Resource Minister. She needs to get out of the fossil fuel capture that she's got, but at the end of the day, she thinks she's looking after her industry. She is, but she's not doing the national good because she's not bringing that industry to invest in the solutions Australia needs.
Wow. We could talk for a lot more. You know we can, and I'd love you to come back for a part 2 in a few months' time. Thanks so much for coming in. My head is aching. There's parts of my brain that haven't had a workout like this for a very long time. I had a great time, and thanks very much for coming in.
Thank you. We even got to talk a little bit about energy, but a lot of those things, yeah. But let me finish by saying I wake up every day, and if I'm depressed, I try. The minute I see anything about America, I'm just tuning off. Like, America's a train wreck, and we've just got to make sure Australia doesn't go down that route. And Pauline Hanson's trying desperately to drag us there. Anyone but Hanson and Tony Abbott. But, sorry, there's the political side. But at the end of the day, I get my inspiration from China, and it's not because of their political system. It's not because of their modern slavery issues. Every country's got problems. So I do remind arrogant Australians who've drunk the American Kool-Aid that Australia's never treated our First Nations people with any respect. People in glass houses shouldn't be throwing rocks at China.
Yeah, that's right.
So
Good
put
point.
that aside. And also I don't see too many slaves sitting in the Chinese factories. They're all bloody robots. And our young engineers can learn so much from the Chinese and the Japanese and the Koreans. But I think China is just running so strategically. But they see, when I talk to the Chinese ambassador, he says Australia and China are very complementary. We have what they need. We have lithium coming out of it. We've got iron ore. We've got coke and coal. We've got LNG. We've got more.
We have nickel. We have copper. We have lots.
Wheat, beef, agriculture,
Yep.
clean dairy. We've got so much that they want. And they see it as complementary. And so let's take that opportunity. Let's get really low-cost solar modules and batteries. Now, will they have national security threats? Of course. Let's have our Australian engineers and electricians make sure that they're actually checking for those sort of bugs, because I'm sure the Americans have done plenty of bugging of Australia.
Everyone bugs everyone.
Industrial espionage. Like
That's
the
it,
Chinese
yeah.
are brilliant in industrial. Who do they learn from? The Brits and the Americans.
Of course they did.
So no country is perfect, but at the end of the day, 60% or 50% of our exports go to 3 countries, North Asia. We're blessed. We live in the Asian century. Let's work with our North Asian trade partners. Let's work with our South Asian trade partners. We live on the Indian Ocean. We've got the biggest market in the world in China. We've got the second biggest market in the world, 1.5 billion Indians.
Yeah, India, yeah.
And then Pakistan and Bangladesh, they might not talk to each other, but at the end of the day, we can service all of those, and we can be friends with everyone and avoid being the little mouse caught between 2 warring elephants, China and America. Let's be friends with everyone, including America, and Europe. And at the end of the day, let's do exports at world's best practice and make sure that our corporates are held to high ESG standards, so they're there for a long time, not a short good time. And let's not bring too much finance to the table in the corporate language, but we can build more renewables than you can poke a stick at, because we've got more capital, we've got low population density, we've got the best wind, the best solar. If we bring our First Nations people along and let them have a share of the upside, a share of the equity as well, they will tell us where we can build the wind and solar, and everyone's a winner, and Australia can help solve the world's single, maybe second biggest challenge in front of us, AI and climate change. Australia can help China solve this for the world at world scale, and our economy will be a lot stronger, and we can look our children in the eyes collectively and say we've actually embraced the opportunity, got over our addiction to fossil fuels, and left the world a better place.
Thanks, Tim. Thanks so much. That's been great.